A common misconception that I see across a bunch of traders is that you need to stick to one trading style and one trading style only, but that is not the case. I promise you, you can be good at trading within ranges and trading trending conditions as well. You just need to know what to look for. So this is why I've created this video for you guys. We are going to be jumping straight onto the charts and breaking down exactly what to look for when you're trading within ranging conditions and exactly what to look for when you're trading within ranging markets. So without further ado, let's go ahead and get right into it. I have this diagram pulled up here on TradingView. If you guys can take a look really quick. I just illustrated two lists: key confluences for trading ranges, key confluences for trading trends. So the main things that we need to look for, I also have examples throughout the past week as well of price action, real trade examples that you could have taken and that were valid within trading ranges and within trading trends as well. So if we go ahead and cover the first list really quick, talking about trading ranges, you need to be looking for essentially these 5 things. And some of these go pretty much hand in hand in terms of number 1 and number 2. As you guys can see, pretty much similar, right? Premium and discount, you're going to be using the fib. What does the fib look like? This is what my settings are. If you guys are curious, just going to go ahead and pull that up really quick. You have all of these settings right here. This is what I use when I mark out my fib from swing highs to swing low. Pretty standard, but you want to be mixing premium and discount levels with OTE as well, right? So for your entry triggers, you want to be looking at OTE. Obviously, OTE lands within a premium / discount area. So if you're looking for longs, you want to be entering more in a discounted range, right? The discounted leg. And if you're looking for shorts, you want to be entering more into a premium. So I've kind of illustrated a nice little example with this path tool over here. We'll go over that really quick after we just cover everything else on this list, right? So we covered premium and discount, we've covered OT. Now we are going to be covering failure swings plus or slash RBs. I don't use RBs in, the typical way that most people think about it. I don't really look at rejection blocks that I think align with order blocks. I've never used order blocks in my life. I determine it based off of the wicks that are created from the candles, right? So we'll have failure swings that go on, right? We'll have choppy price action as we see illustrated over here. Boom, we have a failure swing that's created, failure to take out this high, and then we go and sweep this low over here before pumping back up, giving us that manipulation, and finally giving us that distribution, right? So 4 and 5 also go hand in hand with each other as well. You'll have these key levels such as higher time frame gaps that we tap into, that we manipulate into, right? We can also have, higher time frame drawn liquidities that are swept. Key levels, essentially, it can be, higher time frame OT levels. It can be, if you use order blocks, we can tap into higher time frame order blocks as well. Again, me personally, I don't use order blocks / key opens. So what do key opens look like? You have 9:30 open, you have 10 a.m. open, daily open, weekly open, monthly open, right? Obviously, weekly and monthly open, you're going to use them more sparingly, but I use daily open often. I use midnight open, I use 10 a.m. open, and 9:30 open. These are the key opens that I look for. I'm not sure if I'm missing some, but if I am, you will probably see it on the chart with the indicators, that I have over here. But yeah, I use those. We look at rejections from those areas, especially when we are trading in an accumulation phase, aka a range, right? If there's key opens along or within this accumulation that align with all the other things that I talked about, that is a high probability entry, even though we're trading within a range, right? The main thing that you want to look for when you're trading ranges is you want to be stacking as many confluences as possible. I also didn't even put an SMT here as well, but that's pretty typical. Same thing for trading trends. You can add SMT to this list as well. Pretty much optional. You don't need a SMT to take an entry, but it just helps, obviously, in terms of stacking confluences. So we covered all of these things. AMD, pretty typical, covered in this illustration over here. Essentially, when you're looking for that manipulation after the accumulation, we need to do one of multiple things, or we can do multiple things as well, right? Again, you're stacking where we're manipulating into, essentially, if that makes sense. But let me break it down really quick. So you have accumulation over here, right? It looks like we want to induce these lows, but we're not. And then we get a manipulation past highs, right? But what do these highs look like? What are the higher probability highs or lows that we manipulate past? It can be session highs, session lows, It can just be pretty obvious swing highs or swing lows, right? So like the extreme swing highs or swing lows, there's no other highs or lows that are nearby. We manipulate past that, and we can also manipulate into a higher time frame key level. So what does that look like? Let me just go ahead and delete that really quick, right? So let's say this ended up being more structured to the left over here, right? We had a lot of bearish price action. Now we're starting to have this accumulation, but we still want to continue the trend, right? The thing about AMD cycles is that, you'll have this phase of distribution and we need to reset after having a distribution. So we need to have accumulation and then a manipulation past highs. Once again, flip this if you are looking for longs, right? So you'll have a manipulation past lows. You'll have a tap into the key level, and then boom, you'll have a distribution back higher, right? That's exactly what we can look at over here. If the higher time frame is very, very bearish, we reset with an accumulation, we get a manipulation past highs, and we could also have a key level to the left over here. Now, what does that key level look like? Me personally, I use higher time frame gaps. So we can tap into a higher time frame gap over here, right? And then boom, added confluence as well is if you have a SMT. If you stack all of these things, you will have a high probability setup, even though technically speaking, we're trading within this consolidation over here, right? Manipulation, boom, displacement, and then you enter off that displacement, especially if you can pair it with a key open as well, right? So let's say 9:30, we have market open over here where we just want to go ahead and manipulate past these highs, right? So if you guys can go ahead and, see where I'm trying to get at over here, it's really more about stacking those confluences. So if we take a look, how many confluences do we have stacked over here? We have number one, okay, we have 9:30, basically having that manipulation back up, sweeping these highs. That is basically 2 and 1. I'll just say that's 2 confluences right there. We have a tap into a higher time frame key level. That's the 3rd confluence over here. And then SMT. I haven't already mentioned that. It's the 4th confluence. So I lost track, but that should be around 3 to 4 confluences, right? Just to take this trade over here to target the lows that we have down below, right? Obviously, that is an A++++ setup. Sometimes we won't get that. We will also talk about that when we're going over examples. But that's how we trade ranges. Pretty straightforward. Now let's go ahead and talk about trading trends. I think another common misconception about trading trends is that you always need to wait for a premium or discounted entry in order to take an entry when we're in a trending market. But I argue the opposite. Instead, if we are focusing strictly on volume, right? There was actually an example today, a very clean example today, and actually Monday, Tuesday, and Wednesday of this week, there were some examples that I can show that I have marked out. But you don't need to always look for retracements into premium or discount levels as long as there's, number one, a very strong correlation between the higher time frame and the lower time frame. So what does that look like, right? You want to be trading within the trend. So if you have higher time frame structure that is showing, very bullish price action, right? You have something like this over here. Let's just go ahead and extend this really quick using the path tool. Let's say we have had very bullish price action over here. Now we're just starting to get a retracement into, your key level to the left over here. What can this be again? Once again, a higher time frame gap. It can be like an hourly gap, even a 15-minute gap, honestly, 15-minute gap, hourly gap, 4-hour gap, daily gap, weekly gap, monthly gap, right? The list goes on. Once we get that, kind of manipulation into that key level, you want to be looking for a strong reaction, right? And that is where you get that lower time frame and higher time frame alignment. So you get that strong reaction out of the lower time frame. You want to see strong volume, all right? Strong volume on the lower time frame in terms of big displacement candles, and then that leads into pullbacks, right? So if we have strong displacement candles on the lower time frame and we get a pullback, once again, it can be within, discount of a range. We can tap into, let's say equilibrium of this leg. Again, added confluence is perfect. That's ideally what you want to be looking for. But if the volume is very strong, you don't always need to look for a retracement into a discount of a leg, right? As long as you're seeing a pullback and you're seeing invalidation of, the mini bearish structure, or once again, vice versa, if you're flipping it and you're looking for shorts, right? If you're looking for, you need to be looking for invalidation of the opposite structure, right? When the pullback is being created. So let's say, for example, over here, we did not actually tap into discount of this leg over here, right? And let's say there was, a lower time frame gap that we tapped into, like let's say a 5-minute gap. Technically speaking, we didn't tap into the discount of this leg over here, but since we are supported by a higher time frame key level, and the fact that we have this 5-minute gap that we've created, and we have strong volume on the lower time frame, aka very, very strong displacing candles, we can be looking to take a potential trade off of an invalidation of this pullback over here, right? If we get strong displacement candles, you can use an IFVG for entry trigger, etc. Boom, you can go ahead and take this and still target either internal liquidity for a 1-to-1, right? Or the external liquidity if you see volume is still keeping up past the internal high over here, which would usually be your break-even point, right? And then you can put your stop at the lows over here once you see that displacement and then enter your trade. The main thing is you are looking for volume, right? Without volume, trading trends, especially when you're trying to take more of the premium entries when you're longing and more discounted entries when you're shorting, you always need to be looking for volume, right? Or just very, very clear market structure in general. So then you have key levels, right? Obviously, we talked about that. Again, I use those higher time frame gaps as my key levels. And then SMT, once again, it's optional. Usually the way that I use SMT would have to be within usually like gaps. So let's say you have a 5-minute tap over here. Perfect, right? You have an SMT, internal SMT within this 5-minute gap. ES goes and takes out this low. NQ doesn't. We respect it. That also acts as a failure swing, right? Because we failed to take out this low. And then boom, displacement, you're able to take your entry off of that, right? So yeah, those are the 5 things that I look at, right? When it comes to trading ranges versus trading trends. Very, very simple. Don't need to overcomplicate it. Once again, the main thing is you want to be looking at these 5 things, right? So with all that being said, let's finally go ahead and get into these examples. Today was honestly a very, very good example of itself. We had 2 areas, all right? We had, or 2 trade opportunities. One, you obviously are trading within the trend, the higher time frame trend. And number 2, you are trading within a range, right? So you're taking shorts over here. Obviously, price is pumping up and up and up and up and up, but we start to slow down. We start to consolidate. You're technically starting to trade within a range over here. Another thing that I do like to correlate as well is I do like to incorporate GEX levels. I do need to add this indicator as well. I don't know why it got removed, but let's go ahead and add it back. Sometimes my indicators, they just like to get removed. It is kind of annoying. If you guys know a fix for that, please let me know because I have no idea why it does like to do this. But with all that being said, let us go ahead and talk about it really quick. All right, let's talk about today's price action. I think I left off in talking about GEX. If you guys don't know what GEX is, basically it stands for gamma exposure. Options, it's used a lot in options. I'm not gonna get too deep into it, but if you guys are interested in terms of learning about what GEX is, I would watch some YouTube videos about it, and I will also leave a link to the Discord to go ahead and purchase this GEX indicator if you are interested in that and you do want to use it. The way that I use GEX is basically as another confluence. I don't take I don't take trades off of these levels alone. I align it with market structure, etc., and other confluences, and that's the best way to use GEX because GEX essentially it is just reactionary levels in the market, right? So that's the way that you want to use it. But anyways, going back to what we were talking about, today's price action, let's go ahead and break it down really quick, right? Right before we get into 9:30 open, I want to take a look at the higher time frame really quick. So if you take a look at the 4-hour time frame, you can also take a look at the daily time frame. It is all relatively the same, but what do we see from this low that we put in? We are in very predominant bullish structure, right? And the area that we're getting a rejection from is from all-time high to this low over here. We tapped into OT of this leg, causing a big pullback, right? But since we are in very predominant bullish structure, we're still going to be looking for a lower time frame correlation with the higher time frame trend. Now, what does that look like? Currently, we are resting in this daily gap over here. Looks like we're diving a little bit deeper into this daily gap. We're retracing a little bit deeper, but no worries. Why? Because we have a potential key reaction area that is coming up. If I turn on the middle line over here, we see that we are approaching the midpoint of this daily gap, and that is a very key reactionary area. Now, if we align that with the lower time frame, we start to get into 9:30 open, right? So we have 9:30 open that comes in, we manipulate into this 15-minute gap over here, Okay. On top of this as well, the midpoint is kind of correlating with these GEX levels over here as well. So if 930 opens up, we tap into the midpoint of this daily gap and we get a sharp reaction, something like this over here, then we can look to potentially take longs, right? Boom, 930 opens up, tap into this key level over here, the midpoint of the daily gap, also this GEX level that's supporting, big displacement higher, and then boom, we can just go ahead and target all of the low resistance liquidity that is built up over here. Another thing is drawn liquidity is very, very key. That should be pretty obvious for more of you tenured traders, the people that have been trading for a while. You guys obviously know drawn liquidity is very, very key, right? Because without a strong drawn liquidity, there is no context in the market. There is no reason for you to even take longs off of this area, right? So let's go ahead and talk about what are the main drawn liquidities that are appearing in kind of this leg over here. First thing that catches my eye is we have a bunch of low resistance liquidity, and I think this is the most perfect low resistance liquidity that has been generated over here. So as we see, we're creating all of these smooth highs, and on top of that as well, on the 4-hour time frame, we have this unmitigated 4-hour gap above over here. So we can go out and take out these highs, and then we can also tap into this 4-hour unfilled gap, right? And on top of that as well, the low resistance liquidity run that we had over here is lined up with session highs. So we have Asia high as a swing high over here. We have London high over here as well, if you guys can look at it. And yeah, the rest is just low resistance liquidity. So if we go ahead and play out price action at 930 open, what do we see? A manipulation, boom, into this daily gap midpoint over here. Also rejection off of this GEX level. And then what do we get? Boom, right? You can get a pullback entry over here. Why? Because we have a bunch of higher time frame volume that's coming in, right? So this is an entry that you can get, and you don't even need to wait for a pullback into the discount of this leg. Why? Because we have such a sharp rejection off of 930 open manipulation over here, and we have a bunch of lower time frame volume that's coming in that realistically, since we're pretty close to open, we're around like 5 minutes into open, we should see this pullback essentially getting respected. Right now, what would you potentially go and target? All right, ideally you would honestly just target, anything pretty nearby, because once again, yes, you have to understand that you are more into a premium of this leg over here, right? So you probably just want to play it a little bit more conservatively, right? In this case, we did actually just end up running all the way up to Asia high over here and running all this low resistance liquidity. But what I would advise is, if you're taking more of these premium entries when you're longing based off lower time frame volume, I would just target nearby liquidity points. That's just the best thing to do. That's what I personally like to do as well if I find myself taking premium entries when I'm longing or discounted entries when I'm shorting, right? So as we see over here, boom, that's a nice little pullback entry. Boom, target the low resistance liquidity up above over here. You're solid. All right, another thing is you can still take a continuation type of entry just off of this over here. Why? Because you're understanding that we have a very, very sharp rejection off of the higher time frame key level, right? And then you have lower time frame volume that's kicking in. So sometimes you can wait for pullbacks. Other times you don't need to, especially if it's aligned with a 930 manipulation in the opposing direction. So again, with trading trends, very, very simple. Just understand the higher time frame structure, correlate lower time frame with higher time frame, wait for pullbacks, or in situations like this where you have a very, very key rejection, you can take entries off the lower time frame based off of that initial higher time frame rejection, right? If price correlates. In this case, it did correlate. Now, second area of taking a trade, you can look for a trade back into a range. What do we see over here leading up to this potential trade opportunity right here? Let's go ahead and talk about it. What did we just run? We just ran all of this low resistance liquidity over here, right? That is number one. That is the number one thing that we're looking at. Cool, we just swept out a high. We should be looking for some sort of pullback, right? If you guys can take a look over here as well, we have 10 a.m. open here as well. It's just kind of blended in with the previous day low over here, but we have 10 a.m. open over here. All right, we want to be looking for some sort of pullback because we never really got a significant pullback within this entire leg over here. We also have a resting 4-hour gap above, so that can potentially set us up for the pullback leading into a continuation. So what does that look like? Boom, start to consolidate a little bit, tap into this GEX level, maybe even sweep out some of these highs, and then we get a break, tap into 10 a.m. open, then we get a continuation back up. That would be the ideal case scenario. So let's see what ended up happening, right? Boom, we go ahead and tap into this GEX level over here, sweeping out this high. You have your first initial displacement leg right here. Once we create this low, what do you want to be looking for? All right, from this low to this high over here, since we tapped into midnight open, you can mark out your OT, right? You can take out your fib and mark out OTE from the swing high to the swing low. What do we see end up happening, right? This is also a failure swing around this area because we failed to take out this high. All right, on top of this as well, what do we see? We have this 5-minute wick that has been created, aka a rejection wick. If you haven't noticed already, you know you have a majority of OTE retracements, right? They usually align with rejection wicks. All right, it is just another added confluence. So we see this wick getting respected over here. The 15-minute wick actually is the highest time frame wick. So we tap into this 15-minute wick over here. We get a rejection that obviously aligns with 705, the golden pocket of this leg over here. And then now you're just taking your rejection off of this area. You can put your stop at the high initially over here until we get some displacement lower, and then you can mitigate your stop to this high over here. So what do we see? Boom, displacement, mitigate your stop to the low as soon as we get that displacement. Unfortunately, this trade did end up edging 10 a.m. open. It's still a valid trade to take, right? This is still a valid drawn liquidity. So you can target key opens for drawn liquidities, or you can use them as reactions as well, right? So over here, we had a reaction off of this area, rejecting off of midnight open. I think we also rejected off of daily open as well. It is just not on my chart right now because of the indicator removal. But as we see over here, we just took out a high where there's no reason for us to still look for longs off of this over here, off of this rejection, because we ran all of the low resistance liquidity that we were talking about. So we're looking for some sort of deeper retracement, maybe into the 15-minute gap that ended up opening up over here, right? And we also have 10 a.m. that perfectly aligns. Unfortunately, we got edged, but once again, those key opens are pretty strong drawn liquidity, such as 10 a.m. open especially, right? What do we see? We finally go ahead and tap into the 4-hour gap, but this would just have been either a break-even trade or you're just trailing your stop, right? That is essentially it. So that was a potential trade opportunity over here, just a structural example like I was talking about. Now we can go ahead and take a look at this setup over here. So this setup ended up happening yesterday on the 5th of August. Let's go ahead and break it down from the extreme higher time frame perspective, right? So yes, we're starting to range over here, but on the higher time frame, we have a very strong drawn liquidity down below. Now, I will talk about the only reason why this trade idea was potentially not the best. It has to do with 10 a.m. open, and we'll talk about that in a little bit. I want to go ahead and I want to talk about what we ended up doing around this area. So yesterday, this is actually when we ended up tapping into the 705 point of this entire leg. So that's when we actually first started to breach 705, the OTE retracement of this entire higher time frame leg. So we took our previous day high. If we drop down to the 15-minute time frame, what do we end up seeing? Look at this over here. Consolidation. What did we talk about initially? Accumulation, manipulation, distribution, right? So we have a bunch of distribution from this low over here, or honestly, from this low over here, we have a bunch of distribution, straight distribution, right? We never really had a pullback yet. And in order to have a pullback after such big displacement, such big distribution, you want to reset with accumulation. And that is exactly what we got over here. We have accumulation, and then what do? 9:30 opens up. We have a nice manipulation past significant highs. What are the significant highs? We have London high over here, right? What is the key level that we tapped into? Higher time frame. That is a key level that we look at. Now, when do we go ahead and take our trade? We don't take our trade as soon as we take out the high over here because there is no structure that is formed off of this displacement leg. We need to wait for some sort of structure to form, and that ends up happening after 10 a.m. So as we see over here, boom, we create this high. We have a displacement lower. It looks like initially we're rejecting off of this 9:30 open to go back higher, but that just instead forms a failure swing for us to go back lower. Now, let's go ahead and talk about why, the only reason why this setup was a little bit wonky. All right, the structure was there, but the setup was a little bit wonky. So from this high to this low, we take out our fib, boom, we mark it out, and then we see that we tap into 786 of this leg over here. All right, cool, wait for a reaction, you enter. Now, the problem is 10 a.m. open is right here, and we end up opening with no real wick higher. There is no wick at all, so there's no manipulation higher on this new 4-hour candle open. Now, if you're going to be targeting the daily open all the way down below over here, well, you probably want to be looking for some sort of manipulation higher to target down lower. Now, let's go ahead and look at the daily time frame really quick as well. If we take a look at the daily time frame, we see that we didn't really create any sort of significant wick higher. We created a very, very baby wick over here, but this is straight manipulation up to take out previous day high. So we want to be looking for obviously that consolidation and a breakout back lower to put in a more of a significant wick on this daily candle over here, right? So now we drop down, we see that obviously in the range we have Asia low, London low, that's stacked over here, but we also have this nice daily open over here down below, and we also have this unmitigated 4-hour gap as well. So we have a bunch of draws for us to take lower, right? And of course we're trading within this range, but the main thing that we need to look for is structure. So if we had a 10 a.m. candle that put in a wick a little bit higher up above over here, and then we got the same displacement, this would have been a very, very A+ setup, right? But as we see, price does end up just displacing lower. Boom, we tap into this area, respect this leg over here as well. We don't break past this high anymore, and then we go lower. All right, cool. So now we're starting to break past this range. Let's now talk about a potential discounted entry that you can take within this leg over here, right? Just because of how strong the drawn liquidities are in terms of putting a wick lower on the daily candle, in terms of London and Asia low being completely stacked, and basically just breaking out of this leg over here. So now we are trading a lower time frame trend, right? We are starting to respect these highs over here. As we see, your first potential entry could have been honestly off of New York open. So as we see, we get a rejection from this area, right? If we take out our fib from the high to this low over here, the range that we're dealing in, we see that 618 aligns with New York open. This is a very discounted entry, but it is within reason because we are starting to pick up volume, right? So we have a bunch of lower time frame volume over here. What is your TP? It can be potentially London and Asia low, or if you're feeling a little bit more risky, right? Or if you just want to target the higher time frame draw, cool. You go ahead and target daily open over here, right? What do we see? Price ends up delivering to TP. And yeah, there you go. Just very, very choppy delivery, but still very, very valid drawn liquidities, right? There you go. TP ends up getting hit. Same thing over here as well in terms of taking a trade. What do we see? We get a rejection off of midnight open over here multiple times, right? Obviously, the deeper and deeper and deeper in discount that you decide to trade into, the lower probability, the lower probability of the trade obviously ending up hitting, right? So ideally, you want to be looking into more of those premium retraces or discount retraces if you're longing or you're shorting. But as you guys can see, it ends up playing out over here because of how much volume we have been pushing lower, right? So cool. We ended up going over Wednesday's price action. Just a couple more examples for you guys before I let you guys go. Let's go ahead and talk about Monday. Okay, Monday was more of a trendy day, as you guys can see over here. Not really a lot of opportunities, I will say, but the opportunities that presented itself were very, very reasonable to go ahead and take. So there's an opportunity over here, opportunity on this pullback, and then kind of after that, not really many opportunities, right? Because, you know, we ended up taking out Asia high, and after that, not really a lot of major drawn liquidities. Cool. Let's go ahead and talk about it on the higher time frame perspective. All right, on the 15-minute time frame, there's something that I want for you guys to take notice of. How did we create this big wick over here? If we look at the range that we're dealing in from this low to this high over here, we see that we perfectly tap into 0.786. We didn't actually fill in this new week opening gap completely on the 1 minute time frame, but we still filled it, all right, at least more than 70% of the way. All that we care about is the rejection that we're seeing on this higher time frame fib over here, right? Of course, from this low that we put in, we've been maintaining bullish structure. Now, all we need to do is correlate the higher time frame with the lower time frame, okay? Cool. We see a rejection off of 0.786, also aligning with the key open of 930, giving us that manipulation lower. So 930 open, let me just go ahead and remove this fib. 930 open is right here. We manipulate into 0.786 of that entire higher time frame leg that I was talking about, and then boom, we get an instant reaction back up. As soon as we see this instant reaction back up, and then we get a nice, closure, displacing closure past 930 open, we are now looking for structure to potentially take a nice continuation entry, right? What is our major drawn liquidity? We have London high and we have Asia high that's pretty relatively close to each other. Cool. What do we see? In this case, we get a nice retracement into the discount of this leg. So we tap into 0.5 and we get a displacement candle higher. So at this point, you should be comfortable in terms of taking this displacement candle over here, stop at the lows, and then you're going ahead and you're targeting Asia high, London high, wherever you ideally want to target. Now, if you ended up missing this entry over here, there was another entry in terms of a new range that we've created, right? So again, we don't need to be in the discount of this leg from this low to this high over here. We just need to be looking at structure getting invalidated. These pullbacks need to be invalidated over here. That is exactly what we get. Boom, a pullback. What do we pull back into? If we take a look at the 5-minute time frame really quick, we end up, if this can show really quick. Okay, there we go. We end up pulling back into, why does this say Wednesday? All right, we're back. I honestly have no idea why this ended up glitching out the replay mode. But anyways, like we talked about, right? So this entry over here, very simple. Discount, tap into 930 open as well. Boom, you get your displacement back up. There you go. You get your entry. Stop at the low over here. Target whatever you need up above, higher. London high, Asia high, whatever it may be, right? Let's go ahead and just remove GEX. So we just kind of remove all of this noise over here. But like we were talking about, now in terms of another potential entry, what does that look like? So like we talked about, the pullbacks that we were seeing over here, you want to see these pullbacks essentially get invalidated. Again, we don't need to retrace entirely into the discount of this leg over here, just due to the fact that we have a ton of volume coming in and we've already had this pullback that is created over here, right? So what does an entry, a premium entry, look like in a situation like this? As we see, 10 a.m. opens up with no real significant wick higher. We have a manipulation lower. Now, if we take a look at the 5-minute time frame, what do we see? A tap into this 5-minute gap over here, and then we get a nice displacing, move back up over here, right? Cool. You get an internal sweep of this low. Perfect. You can take your trade somewhere over here. And if you're still not confident in taking a trade over here, you can wait till you get the displacement up above over here, right? What do we see? We get a retracement into this area. We fail to take out this low. Boom, you can now put your stop at the low over here, right? Or you can honestly put your stop at this low as well. And then you can go ahead and target London high, extend it a little bit for a 1-to-1 RR, or you can end up holding to Asia high. Now, if we also take a look at the 5-minute time frame, as we see, we're starting to respect wicks as well, right? We're respecting these wicks and we're pushing up higher. That is exactly what you want to see in terms of taking those continuation entries in premium of legs when you're longing, right? And discount in legs when you're shorting, of course. So that was another trade opportunity. So there's 2 trade opportunities on Monday, and yeah, that was about it. Now, ending off the examples on Friday. So this was actually a very, very textbook short opportunity. Let's go ahead and talk about it really quick. This would be more in terms of trading within a range. So same thing as we see over here. If we go to the 5-minute time frame, or if we even go to the 15-minute time frame, just to make things a lot more clear, what do we see over here, right? From the bottom, once again, we have a bunch, and when I mean a bunch, I mean a bunch, right? We have a bunch of displacement higher, right? A bunch of distribution back higher. We didn't really have the opportunity to have a pullback yet, right? We didn't create that pullback opportunity yet. And what is a good signal to understand when we're going to have that pullback is when we start to have consolidation overnight, right? On the mid time frames, higher time frames, that will set you up for a potential short or long opportunity, obviously, depending on the structure that you're dealing with, right? In this case, we're looking for a short opportunity for a deeper retrace. Now, another thing that we need to notify or notice is that what are we going to retrace into? So if we take a look at the hourly time frame or even the 4-hour time frame, we have these unmitigated 4-hour gaps over here as well, right? Boom, we have this 4-hour gap that barely got tapped into. Boom, we can go ahead and target that as our drawn liquidity. I'm pretty sure that happened off of 930 open as well, right? We manipulated paths of highs, and then boom, we went to go ahead and target this 4-hour gap here, right? So that is your deeper pullback that you're looking at. Now we have to correlate that with what the lower time frame is saying. So once again, we are looking at key opens, okay? Key open, 930 is pulling up over here. Now, the bonus to this is we had a very, very strong external SMT with ES over here. So the manipulation also aligned with a external SMT. So that's perfect. Now, if we look at the higher time frame as well, did we get a manipulation into a key level? Let's go ahead and take a look. If we just go ahead and go through this price action over here, we can honestly take this out as well. Did we manipulate into some sort of higher time frame key level? Technically speaking, we did, because we are in this 4-hour gap over here. There is nothing on the daily But what I can tell you is we have this daily rejection wick over here. So that is what we ended up manipulating into, right? We failed to sweep out this high that tapped into the daily gap over here. So that was the key level that we tapped into, this rejection wick over here, higher time frame rejection wick. And then on top of that, we obviously had that manipulation with the SMT, and then rest is just history, right? 930 opens up, boom, we have a very, very quick manipulation past these highs over here, creating that external SMT. And what do we see? A very, very sharp V-shaped recovery. So what can we tell in this range that we're dealing in over here? Accumulation, manipulation, and now we're getting that distribution back lower to Asia low, and also obviously to tap into the 4-hour gap to create that pullback to long off of again, right? So again, we're still respecting higher time frame structure over here, but we're able to catch that, technically speaking, that higher time frame manipulation into a key level to set us up for longs again, right? To continue the higher time frame trend. So it's as simple as that. You can catch these types of trades over here. You just need to know what to look for. 930 open, boom, we push up over here, manipulate, SMT, V-shaped recovery, you enter. Now let's say you miss this entry over here. How can you find a continuation when we're just completely displacing in one direction, right? With no real significant pullbacks. Well, you use key opens. So we tap into 930 open over here. This also aligns with this 1 minute gap. Boom, you see a very, very quick candle flip over here. Boom, you can now put your stop at the high, and then same thing, you can go ahead and target Asia low over here, right? As we see, TP just ends up flushing, and I think we finally go ahead and tap into that 4-hour gap as we see over here. So those are all the examples that I have for you in this video. I hope you guys were able to learn something. I hope you guys were able to take something from this video, and hopefully you'll be able to apply it in your own trading. So just to recap everything really quick, right? Going back to the list that we were talking about, these are really the key things that you need to look for. Do not overcomplicate your trading. Just be patient. That is the main thing. Be patient, wait for these things to appear within, a range or within a trend, and then you just enter. It is as simple as that. Do not make things harder than it needs to be, and be patient. Wait for these things to appear, wait for structure to appear that you like to take trades off of, and then just click the button. I personally don't like to have a checklist. It is up to you whether you want to have a checklist or not. I personally think it makes things a lot more mechanical, and our edge is just having discretion, right? Applying discretion in the markets. Now, with that being said, that is all that I have for you guys in today's video. I hope you guys enjoyed. I hope you guys were able to learn something. And if you guys aren't already knowing, I do giveaways weekly. Tomorrow, I am giving away 30 accounts. I do this every Friday, depending on the amount of accounts that I receive. So if you aren't already using my code, make sure to use code AB on majority of prop firms. Literally any prop firm that you can think of, just use code AB and you will be automatically entered into any one of these giveaways. I want to give back a lot more to the community, and the best way that I can do that is by giving away accounts. So if you want to support me, go ahead and use code AB, and I will see you guys in the next video.